surprise.
Hello pattern traders, this is Kirk with PatternTradingGroup.com. Hey, today I wanted to do an impromptu technical analysis video. Hopefully anybody watching this video has already read the Harmonic pattern trading plan that we have on the PatternTradingGroup.com website. Let's jump right into it. What we're looking at here is a 4-hour chart of the Euro futures contract, and what I wanted to do is just kind of go through, if we're sitting with a blank slate here as far as a clean chart goes, how we'd go about analyzing this chart. We can see that from the left side of the chart, prices run up. It has since retraced, done kind of a double bottom here, gone back up to a lower high, and has since sold off, making a lower low than these lows here. So that's just the structure we see from the beginning. The first thing we would do is look at this leg down. We want to kind of analyze going backwards from right to left, and we want to see what stopped this here, how big of a stop it might have been, and then start to evaluate what kind of retrace we might see up into highs here before we get a reaction back down. So the first thing we're going to do is, using our Fibonacci retracement tool, we are going to look for lows below this low, major swing lows to the major swing highs, and see if we can find a harmonic fib that bounds that low. And there you have it. We've got a 78.6 right there at the 2657s that is bounding that low very close. And let's go ahead and take these others off to keep our chart clean there. So you can see from this major swing low here at the 2514s up to the 3184s, the 78.6 is holding prices up. Okay, now what we'd like to do is start to evaluate this move here relative to how high it might go before we can see a reaction down and possibly trade it. We are in a downtrend here, so ideally we would like to get short, understanding that we're bound here by the 78.6 currently. But as you can see, we've got major swing low all the way down here that definitely would give us more room to the downside. So the first thing we're going to do is start again working right to left and trace up to each major swing high, starting at this swing high to swing low, and that looks like a good pull. And the reason I say that is it looks like traders are respecting these levels, in that this 61.8 here saw some significant rejection before price moved back up and moved through it. It looks like we could be forming a really nice Gartley pattern here. So what we'd like to do is kind of start drawing in this Gartley pattern so we can unclutter the chart a little bit with some of these fib retracements. So let's go ahead and get the XA leg in, and let's go ahead and get in the line here for the 61.8 retracement, and then we can take that off our charts. That'll help clean that pattern up a little bit. Then what we'd like to do is put in our AB equals CD tool. AB CD. Now there's some tremendous confluence there at that 78.6 that's looking like we may have a very, very tradable pattern. And this is a pattern on a 4-hour chart, so it can be a pretty strong and powerful setup. So let's go ahead and draw in this other potential leg here. Alright, that would represent our 786. And let's go ahead and label these just for the sake of the video here. There's our X, our A, our B, our C, and this is a potential D point right here. And you know what I need to do is I need to go in and darken these so that everybody can see them. Let's take a second here. I hate wasting valuable video space on these tasks. And let's set that as a default. And we'll go ahead and leave B and C a little lighter there just to differentiate. Now what we'd also like to do is look for some confluence here at this level. We've already got tremendous confluence with the AB equals CD terminating right here at the 786 when we had a 618 B point here. That's as symmetric as a Gartley pattern as we would ever look for. So anything else we can find is just at this point a nail in the coffin as far as a tradable pattern. But let's go ahead and try and nail that coffin shut anyway, just so you can see how it's done. Okay, so we want to look and see if these other swings offer us some confluent points with our major fibs. Well, it certainly looks like we've got a 50% right there, so let's leave that. And we've got a 38.2 there at the 38.49s. So we'll leave that. And then last but not least, all the way swing high to swing low. Let's see where that 38.2 comes in, because it's clearly going to be a 38.2. The difference between these 2 points not being a whole lot. 28.63. So let's go ahead and zoom in on this now and really get some definition on this pattern and define our zone. We could clearly define this as our potential entry zone, and that runs from the 28.36s to the 28.63s. So that's, what is that, about 27 pips. So that's not a huge range, and we could use that whole range. We don't necessarily need to. If we did a set and forget order just right out here at the 35s, we could use 30 pips and go back behind here if our risk tolerance allows it. Or what we can do if we're going to be in front of the market when this hits is we can go down to a smaller time frame and watch how the price action behaves once it gets up into our zone, and we could cut our risk down. It may just go a few pips in and show us a real clear, say a pin bar rejection out of that level, and we go ahead and order and at least get behind these 28.49s as a minimum. I think we want to stay behind that. It's kind of that round number, 28.50. And let's see what kind of profit we could have on this trade. If everybody has read the trading plan, they know where our first profit target is. Where is it? That's right, it's at the 50% of the C to D leg. And so we're going to assume it gets right up here to the AB equals CD level. And right now we could assume if that entry point is right there at the 30 we'll call it the 37s. There's 30 pips to be had right here with the first target hit, so we can definitely get a 1-to-1 on that, and depending on how it enters into the zone here, we could actually get greater than 1-to-1. Our second profit target, if we are trading multiple contracts and we want to do a reduced risk or a risk off, zero risk trade management setup, would be the 61.8 of the A to D leg, which would be right in here. And remember, we always want to leave a couple pips on the bone. We never want to cut that too tight. We like to get out while sellers are still selling or when buyers are still buying. And that puts us at the 27.31s. And so that's going to put, let's see, just about 90 pips of profit on this trade for a second target hit. And if that thing really keeps moving, if the market lets loose and we're trading 3 contracts or more, we're going to be looking at a third target down here just above the 127 extension of A to D. That's what this red line represents at the 26.16s. So that's going to be 220 pips. So this would be 220 pips. This would be about 90 pips. And this one, if I recall, was about 30 pips. That doesn't look quite right. Let's go in here and measure that for sure. My memory is getting bad as I'm getting older. Here we go. 67s. Up to the 07s would be 40. So we're talking 60 pips, aren't we? So we've got more like 2-to-1 just on our first target hit at this 50%. And let's just go confirm it. Yep. So there you go, pattern traders. Just a quick tutorial on how we would take a clean blank screen, and it doesn't matter the time frame. In this case, we're looking at a 4-hour chart. We could have just as easily been looking at a 5-minute chart or a weekly chart. The only difference is how quickly price will move to those points and what kind of spread, if you will, that there is from entries to stops and targets. So obviously the larger the time frame, the larger the spread from the entry to the target, and also the larger risk typically that needs to be taken on any given trade to get into a safe edge, if you will. If you have any questions, go ahead and post them or contact me. I hope that you found this video helpful. We've got a nice pattern setting up for anybody who sees this prior to our trading day tomorrow on November 20th, 2012. Happy and green trading, and we'll talk to you soon. We'll see you in the live chat room and in the members area.